Hi, it's Charles Kelly, Money Tips Podcast. Today, I've been to the Landlords show, and that was in London. Saw the NRLA stand, the National Landlords Residential Landlords Association. They're a good organisation to be in if you are a landlord. I always pick up lots of freebies and probably never use them again, but I do pick up a lot of stuff. But I did see, unusually, in the exhibition hall, a lot of organisations looking for properties on either a guaranteed rent or rent-to-rent basis. You know, Ensley, what's this called? Elliot Lee celebrating 20 years. The Housing Network on this yellow card here. That was Elliot Lee again. There were loads of them. Serco, the big company, of course, are always in the news with asylum seekers and that sort of thing. They were looking for properties actually in the Midlands area and the north. They've got a huge demand. They've got 500 contracts apparently. I mean, they're like huge. They're getting so many government contracts. So if you're a landlord and you're fed up with managing your property, there are lots of options now to take the management away from you and perhaps even increase your rental income with less hassle. Got to watch the lenders though. Some lenders don't like it. If you're on your buy-to-let mortgage, you've got to inform the lender if you're switching to a different, more of a commercial let or a long-term lease. But some lenders are flexible, others aren't. But you just be careful, and your insurance would need to change as well. But I saw lots of those. There was news there about what's going on. Of course, we've heard about this sort of reprieve for landlords, haven't we? With the Rishi sort of backpedaling on his green policies, or his own party's green policies, and now saying that they're going to drop the requirement for all electric cars by 2030, or no new combustion engine cars sold or built after 2030. They're going to push that back. But one of the things that benefit from the landlord's point of view was the EPC requirements that were coming in to force landlords to put their properties from a D to a C rating, which was going to cost landlords thousands, if not tens of thousands of pounds. I mean, I myself own a property which is an end of terrace, and I've just let a property for a different landlord through my letting agency, and their property is exactly the same, but it's a mid terrace, and they've got a C rating. I've got a D rating on mine, and it could cost, I don't know how much to do cavity wall and all the rest of it, but it could cost up to £10,000 just to fix that side of things. But now that burden has been lifted off of me. But it doesn't mean that you stop investing in your property and you stop making them better. But you still got to carry on and make your properties as energy efficient as possible. Of course, cavity wall and some of this loft insulation has caused problems, particularly this foam loft insulation that they spray everywhere. And some of the cavity walls, if it's not installed properly, has caused huge problems for landlords. And then sometimes the company that installed them have gone bust, gone out of business, whatever. So you just got to be careful what you do there. I wanted to talk about interest rates as well, because obviously last week we heard that the Bank of England decided to hold rates, and this was unusual. It was the first time in about 14 or 15 meetings that they decided to hold interest rates. And I'm just going to go back to the interest rates page here. 1 second. Okay, let's go back to that page. Yeah, this is, and they've decided to hold rates instead of increasing rates again, because they've done this every time. So if you're a betting person and you like a casino, if you were betting on black against red and you think, well, black's run for 15 times, and you keep betting and doubling your money, well, everyone I think expected rates to go up, in fact, but they didn't, fortunately, for landlords and buy-to-let investors. Okay, so I hope you can see that now. Now, I've been checking out some of the rates this week, the best UK residential mortgage rates, because they have come down a bit since rates were held. But that doesn't mean they're going to stay down, because the Bank of England is still aiming for this 2% inflation target. So they keep saying the hard work has to come. What hard work? They just sit there and increase rates. We're having the hard work of paying all these mortgages, but the Bank of England sit up there on their ivory throne, having caused a lot of this inflation. Now they're hitting us with higher interest rates, which the evidence, not all the evidence suggests that it's a very efficient way of bringing down inflation. Of course, inflation has come down. It come down below 7%, but we're still paying a lot for stuff in the shops and food and that sort of thing, and energy bills as well, has also hit landlords. But inflation rates are down. Fuel has gone up there. Now, here we go. Find 5%, sub-5, below 5% mortgages from lenders to Yorkshire Building Society, Virgin Money, Bank of Ireland. Here we go. Bank of Ireland for intermediaries. That means you probably have to use a broker. 5.39 fixed to January 2026. That's only a 2-year. A 3-year there, 5.43. So you could get a 5 or thereabouts percent fixed for a couple of years and then hope that interest rates will come down. But are they going to come down to where they were before? Well, unless we have a huge recession, which many people are predicting, if we had a big recession, then they might start bringing down interest rates to boost the economy, as opposed to what they're doing now is to suppress the economy and drive us into recession. I just don't get it. Now you see here this 5.43 fixed, but look at the rate it's going up to, reverting to 8.04% after 2 years, and a product fee of £1,500. This one here, fixed till January 27, it goes up to 8%. I don't like the sound of that. And then a fixed fee of £1,000. And then we've got Yorkshire Building Society. There you go, a better rate, 4.99. Again, reversing to 8.24. I guess at the end of that period, they will say, well, you've got to then fix again and pay another product fee. That's a £1,500 fee. So you've got to really discuss this with your broker and see which deals are really the best rates and which are not, when you take into account the fees. And then not all of these will apply to mortgages above a certain loan to value. Some of them might be 60% loan to value. The headline rates tend to be quite low loan to values. Here's some buy to let deals I can show you here. Thank you. Okay, buy to let mortgage. Now this is what I'm talking about here. A buy to let lender launches a market leading 3.9% rate, but there's a big catch. Of course, this is a headline rate. It catches the headline and probably reveals a lender that you may not have heard of. SBI UK. I've come across them. Belong to the State Bank of India. A little known bank has sent shockwaves across the buy-to-let market after launching a deal with a 3.9% interest rate. Okay, yeah, right. Let's see what it amounts to. However, it's not the lowest rate when you take into account the fees, according to Moneyfacts. The average two fixed. This is the average 2 fixed rate buy-to-let mortgages. I think they mean 2-year fixed rate buy-to-let mortgages is 6.48. So the only thing here is it's a 50% loan to value. So 50%. A lot of lenders might not have that much equity in their property. But if you've got it, I mean, if you've got a fixed percent, and you can go for a 50% mortgage, that's fine. But there is a big fee here. So they give an example on a 200,000 interest-only mortgage. A 3.9% would equate to £650 a month, compared to the average of 1,000. So it's a good deal, but there's a big product fee, 5% product fee, and this can be added to the mortgage or paid up front. So that means someone taking out a £200,000 loan would be charged £10,000. Oh my God! Can you imagine that? A £10,000 fee added to the loan. And of course, you'll be paying interest on that unless you're going to pay that fee yourself. I think most people say, oh, add it to the loan, don't worry about it now. But if you keep increasing your mortgage over the years, that £10,000 fee could cost you £20,000 or £30,000, depending on how long you keep it. But Virgin Money has a rate of 4.87% deal available for those buying with a 40% deposit, so it's a 60% loan to value. And it comes with a smaller fee of £3,000. So that's a bit more reasonable. So you can see there are rates here. In fact, they look lower than the residentials because they must be trying to keep, win the business from the landlords. And as a lot of landlords are selling, maybe they're trying to fight back and say, look, we need the business, because the lenders must be quiet at the moment. And all the mortgage brokers tell me this, that things are quiet. Again, John Charcoal, the big mortgage broker, said, no other lender has broken through the 4.5% barrier. A 2-year fixed rate of 50% loan to value. Yeah, it's become quite good, but just watch it. So what I'm saying, there's strings attached to some of these deals, so you've got to watch how much the fee. And what a broker can tell you is how much the fee adds to your rate. And if you're looking at a fee of, say, over a 2-year period, on that sort of Yorkshire Building Society deal, a £3,000 fee over a 2-year period equates to £1,500 a year. So how much does that add to the rate and the cost of your mortgage? I know you're adding it to the loan and maybe it helps your cash flow, but it's still a cost to you one way or the other. So a mortgage broker, a good mortgage broker, will say, yeah, this is a lower rate, but it has a higher fee. So therefore, this deal here, which is a slightly higher rate with a lower fee, or maybe a very small fee, is a better deal for you. And they work out the total cost of that loan over the 2, 3, 5-year fixed rate period. And then you've got to look at the rate that it's going into at the end, because you could be clobbered with a higher rate and maybe not able to switch it to one of the lender's own products, or not able to switch it out at all. I was speaking to a mortgage broker recently, and she said a lot of people are stuck with rates. They're unable to remortgage. The lender's not helping them very much. And the lender says, well, if I give you a fixed rate, you don't meet the affordability criteria. So a lot of people are in trouble. A lot of people are in trouble with the Help to Buy loans as well. They've bought new properties, particularly in places like London, where the values were overinflated. How did the lenders, how did the builders get away with these things? How did they get away with overinflating the values? And then the surveyor comes in and values them all at the overinflated price, and the lender lends the money. But a lot of these people are now in negative equity because they got the loan plus the Help to Buy, and now the value's dropped because a new property is like a new car. You drive it off the driveway, it's worth less, and that's what I've always found with new properties, new build stuff. And now with the market dropping and the new build factor added in as well, some of these people are in negative equity. And the Help to Buy loan is costing them 7 or 8%. So they are really being clobbered, and some of them are selling up because they just can't afford to stay in these properties with the higher rates, and they're losing money. So we're hearing this phrase negative equity again in many circles. It hasn't hit the mainstream media, but I keep an eye on what's going on at sort of ground level. And just to confirm there, bank U-turn on EPC rules for rental homes, what it's to mean for landlords and tenants. I mean, I think we all know what that means. It was going to come in to achieve an EPC rating by 2028, but this is fine. You can also sit back and celebrate as a landlord, but it doesn't mean that all of the regulation has gone away. There's regulations coming in this month on buildings, shared buildings, on fire regulations, for instance, having a fire officer, all these sort of red tape that's coming in, and also the Tenant Reform Act has not gone away. Neither has the threat of a Labour government. And if Labour come in, I think they'll be tougher on landlords than the Conservatives, even though the Conservatives haven't done landlords that many favours in the last few years, particularly people like George Osborne. So that could come in. One thing Rishi has said recently, though, they're hinting at scrapping inheritance tax, which is interesting. But the amount raised by inheritance tax, look, is 15 billion in a decade. So I don't know how they're going to get rid of this tax and make up the difference, in terms of lost revenue for the government and for us as taxpayers. Because if you reduce tax over here, you've got to increase it over there somewhere, on income tax, on capital gains or whatever. But this is obviously a vote winner, as are these reverse gear on green energy and net zero policies. But the government has refused to comment on it. But this has been leaked out into the media to see what people's reactions are. But it would particularly help people that have just bought a house maybe 20, 30 years ago. The house has gone up in value and they want to pass it on to their children. But a lot of people have been caught by the inheritance tax trap. And apparently many other countries have already scrapped this in Europe. So I think it would be a positive move. It would encourage people to invest and build wealth rather than discouraging them and hiding money away and this sort of thing. And it doesn't affect the multimillionaires like George Osborne, because they can move their money around, they can move their money abroad. But the average person stuck with their main residence, it is a problem. If you need help on tax planning for inheritance tax, like you might own a lot of properties, do contact me. I've got an expert in that, can help you plan ahead and save on inheritance tax. And maybe you could be like the Duke of Westminster, who inherited 7 billion, didn't pay a penny in inheritance tax. And also, if you're a landlord, maybe look at where your property is now. Is it in your own name? Do you want to move it to a limited company? Are you worried about stamp duty and capital gains? Again, drop me a line on charles@charleskelly.net or in the comments, and I can put you onto advisors who can help you do that without incurring the stamp duty and the capital gains tax. I think that's about all I want to cover today. So there are some good signs that, as I said, rates have come down, which is great. But I wouldn't hold your breath. I wouldn't sort of just relax just yet, because I think the Bank of England may increase rates again unless we see a substantial drop in inflation. So I think I've covered everything there. Thanks very much for listening. Have a great day. And if you are a landlord, there are encouraging signs out there for us. But as I say, don't hold your breath. Thanks a lot. Bye for now.